Tonight we have two. Thanks for everyone for joining us tonight. Tonight we have two special guests. We have Daniela and Anthony from First National. First National is actually one of my favorite mortgage financing companies to work with, and they're actually one of the biggest. Their volume is what? Your book is about $100 billion. Is that true?
Yeah.
So I'm excited to hear the extra the products that you have and features that differentiate you from the banks. Again, Daniela, we're going to start off with yourself, right?
Yeah. Hi, everyone. Thank you for joining us this evening. Myself and Anthony here. I represent the prime side of the residential business at First National, and Anthony represents Excalibur, which is our Alt-A. So we'll get into that. I'll get him to explain more about what that all means. A little bit, as Carmelo just touched on, who we are. We are Canada's largest non-bank lender, and we have been since 1988. This year is our 35th anniversary. Our sole focus is mortgages. We don't actually acquire any other products from your customers. We don't have anything else outside of residential mortgages. We do have a commercial arm, but that is through our commercial section of the mortgage finance company that we are. We have over 100 billion mortgages under administration. We have a culture of service ingrained in our values and our operations, and always have. And we currently have over 5,000 commercial clients, as mentioned, and 230,000 single family, and we're traded on the TSX. So we're quite large. Like I said, it's just not an operational bank that you have a brick and mortar branch to, but we are very large. Like we said, service is something you can count on. So some little tidbits about us in terms of things that you can count on for your clients as well. If you are using a mortgage broker who, like Carmelo, would be sending his deal to First National, we offer free Echelon home warranty for the first year. And what that is Echelon home warranty will cover things like furnace, air conditioning, anything non-structural in terms of repairs. I always bring this up. I always have brokers reach out to me year over year. Somebody's air conditioner broke on the hottest day of the summer. So it's great if you're in the resale housing market and you did want to purchase an older home, possibly with a furnace issue or whatnot. Not to worry, with the first year of Echelon home warranty, you will have that repaired up to $10,000 on us. And every year we do get a call about this. So it's great. After the first year, you can always stay in the program or opt out. 4-hour application turnaround time. So if you're looking to get a condition of financing met, you've got a quick turnaround, we're definitely the place to be for that. And that's for both sides of our business, a 4-hour application turnaround time, which is amazing. We do have an AVM, which is also very helpful. What an AVM is an automated valuation model, which is for your appraisal. So we can get the home value back to you as quick as possible. So in terms of, market pricing and value market, which would actually give us the mortgage value. So in terms of being able to work with that. So we do have an AVM, which is a much reduced cost than ordering a full appraisal. So that's really helpful as well. And we have favorable penalty. We have favorable penalty calculations as well. And I'll touch on that a little bit throughout. So here actually is 4 simple steps to calculating First National's IRD penalties. This is probably one of the biggest advantages of using a non-bank lender. IRD is interest rate differential, and essentially what it is you would take your current rate on your mortgage. So these rates are a little bit outdated because today's market's a little bit higher, but they're pretty decent. 414 would be your rate. You would subtract the current rate. So let's say rates have gone down, so it would be to 3.29. Then you would multiply it by how much time is left actually on the mortgage. So in this example, 2 years. Multiplied by the balance remaining, so $350,000 would be your mortgage amount. So the current rate of 414 less the current market rate of 329 would give you 0.85. You would then, or there it is, you see it at the bottom of the screen there, or 0.0085 times the 2 years times 350 gives you an IRD of $5,950. So this is a great screenshot just to be able to kind of calculate how our IRD works versus the banks that'll actually use the current market rates and the posted, which could give you those, we've heard of these massive penalties that could be 10, 20, 30,000. I've even heard of 40,000 for a penalty. So this is a huge factor because it is the massive differential between us and the banks, among other things that we do great. So how other lenders calculate IRD, so they would take the 414, which would be the current mortgage rate. They would subtract the current market minus your original discount. So they would actually take the discount that you got. So if the market rate today is 3.29, they would take the discount of 1.1, and then they would multiply that by the time left, and then multiply it by the balance. So again, at the bottom, you'll see the equation of current rate less current market rate less original discount, which equals 219, and then times that by 2 years times 350 balance. The difference, so this is the exact same math equation. The balance, the penalty here would be 13,650 versus ours, which was 5,950. So it's literally nearly.
Yeah, Daniela, this is a great example. Because again, as the banks, and we are in a higher interest rate environment, those who are going to like the big banks and want to get a mortgage, and when rates go down, the penalties going with like the big five are going to be significantly larger.
Significantly, yes.
Compared to what First National offers, because you don't really have that discount model. This is your rate, and when you calculate IRDs based on whatever your rates are at that time. A lot of people I know, as rates come down, again, like using the same rate with your example, it's like 150% bigger. When rates come down, it's gonna just balloon.
Oh, absolutely. And we saw this during the height of COVID when there was a massive rate reduction at the, back in 2020 when we saw rates really plummet. A lot of people wanted to either take out refi because rates had come down so high, but when they actually contacted us with their bank, their current banks, their penalties were massive. And that's when I heard of these $20,000, $30,000 penalties where people couldn't afford the penalty and they would actually be staying with their current lender, but then they wanted to move because of rates. Now, obviously that's all kind of ironed out, and here we are right now we're kind of in a decreasing rate market. It's a little bit interesting. It's been a bit of a roller coaster over the last little bit with rates in the prime space specifically. Just because it's been a little bit hectic. Bond yield rates, which does affect our pricing, has come down over the last few weeks. So we've actually seen a little bit of a decrease in rates. But again, when we are looking at IRD, you'll see again at the bottom of the screen there, the same exact equation. Ours would be about 5,950 versus 13,650. So it's a massive difference when you're trying to speak to your clients. When clients will say to you, well, why would I go with a non-bank lender? This is probably one of the reasons. Again, the other thing that when you're working with realtor partners also is understanding if your clients are buying a condo, maybe they're going to have a family and they need to move, right? So are they going to stay in the lifespan of their mortgage, which is usually a 5-year term? The reality of the situation is most people don't make it out of their 3rd year without needing to either move or to refinance. So this is something to keep in mind when we look at calculating penalties. So that's that. Importance of using a mortgage broker. Again, importance of using a mortgage broker is things like this to understand why First National would be a strong servicing partner. 4-hour turnaround, as I mentioned, the IRD penalties, free home warranty, and just the value in terms of how we are able to issue this. So mortgage broker commitment, from us up to the broker to yourselves as the client, to keep you up to date. We keep the broker constantly up to date through our Merlin portal, which is our broker side of things. It's constant updating. The broker would be working with one of our amazing underwriting team. They're constantly being updated. We can provide valuable resources as well. If you visit firstnational.ca, which is our website, there's a ton of information there, market insights, market commentary from some of our experts in treasury, or just even from our CEO, Jason Ellis, or Scott McKenzie, who's another one of our EVPs in residential lending. You'll be able to see information from there. You'll also be able to see our posted rate. So there's full transparency between you and your mortgage broker as well. And essentially, we're here to provide the right solution. So it's up to us to be able to find the right fit. If you're not a prime side client, would you be an Excalibur client, which again, Anthony will get into momentarily. So there's different solutions for us. We are, at least we're an umbrella. We're a one-stop shop that you're able to come to us. If the deal doesn't fit in the prime space, we can definitely turn that over to Excalibur without having to resubmit it. And, possibly more paperwork sometimes just because documents are always fun, but we're able to at least eliminate one step of the process through that. So that's that. I'm going to touch on market insight. Go ahead.
Sorry, Danielle, I just want to say thanks for sharing and promoting mortgage brokers. Again, I love you guys. Your turnaround is so fast. And anytime I upload the documents, it's like, sometimes in the morning I upload a document and by the end of the day I got an answer. It's just it's nice to know files get complete quickly, And my customers are happy because they're like, oh my God, that was so fast. I went to my bank and just to speak with someone, I had to book an appointment 3 days from now.
Yeah, no, our sole priority is our mortgage broker partners. That is where we get our business from. Because we're not a brick and mortar bank, we don't have branches. Your clients can't come to us directly. So without you, we don't have a business. So we support, obviously, wanting to make you as successful as possible. So realtor partners who are on the call, using a mortgage broker, this is the reason why, because they have the access to a great lender like First National. And obviously, I sound like a true salesperson saying that, but the reality is it truly is one of the largest, one of the best lenders that possibly are out there. Again, from insightful information that we offer through our website, through the broker knowledge, to being able to get things turned around as quickly as possible. Those are all super positives in today's market, where, yeah, you do need to book an appointment 3 days in advance to get some information sometimes, right? So different things like that are available to the broker, and we're always happy to help your broker service your clients. I'm just going to touch on market insight, and then I'm going to turn it over to Anthony because I'm blabbing now. But so market insight in terms of the next couple of months, you know, I'm not going to read everything here, but there's the second point there. The Bank of Canada has been trying to wrestle inflation back to its 2% target by raising interest rates to slow the economy. There have been 10 rate hikes since March of 2022, and they appear to be delivering the desired results. Inflation is down, household spending is down, employment is down, and GDP growth is down. 2 settings in a row, the Bank of Canada has held its trend-setting rate at 5%, and there is little indication of any future increases are coming. So this is indicative of essentially what the Bank of Canada has been trying to do. Obviously, COVID decreased the rates immensely during March of 2020, and basically we had record historic interest rate lows. Since then, they've obviously started to climb back up, and things have obviously started to change. As we noted there, everything is down. So technically, are we in a recession? They say that we are in a soft recession, which is why things have held. This also has been affected by world events. So this past year, was it this year or last year, when the war broke out in Ukraine and Russia, we saw a massive influx in the gasoline and all that type of stuff. So that made a big difference. We weren't expecting that. This year, unfortunately, this past October, what's happening in the Middle East, in Israel, that has affected things. But the bond yield hasn't shown as much effect on that war as it did from the Ukraine war, because we held so much of our fuel stuff from Russia. So that became a big difference. So sometimes the bond markets it is affected to us by what is happening in the world. So overall, the U.S. also plays a massive part in this. The U.S. market is down. We don't know if there will be another increase in the U.S., which would possibly show that we might have another increase. I personally believe that we won't see any other increases, as we kind of have predicted here, that we don't see further increases are coming. And we kind of think that in 2024, we might start to see decreases, and they'll be slight, but they will be decreases, possibly as early as May, June. I'm going to say after the spring market. I imagine that from January to that May, June timeline, we will see the market hold in terms of inflation and the prime rate at 5%. We might start to see decreases come mid next year. And if they don't come mid next year, I'd be confident to say that we'll see them in Q4. So by the fall, we would definitely see it more so than possibly. But I think the start of it will be that May, June trigger. I know Anthony and I were touching on this today with another brokerage. May, June probably, and then kind of come out September, October. Definitely we'll start to see, possible better decreases. But the incline is always faster than the decline. It'll take a long time for them to drop back down. So just keeping that in mind. And you can read there, this is, will be shared with you guys, with all of you. You guys can see it all there. Even though the BOC doesn't expect to see inflation back until mid-2025, some recent comments from the bank's bosses have the bond markets looking for rate cuts. Both Governor Tiff Macklem and Deputy Governor Carolyn Rogers told the Federal Finance Committee to start with 2% is the target hit. We're currently at 3.8. So it's a little bit higher. Obviously, we're closer to 4 than we are to 3. So it'll be interesting to see how long that takes to all come down.
Thanks, Daniela.
Yeah.
A lot
Anthony,
of
I was going to say,
information.
Anthony, did you want to chime in?
Yeah, and I mean a big thing right now. We had a great presenter at the mortgage conference called Benjamin Tal, who spoke on the market insight and where rates are looking to go and what's going on with the inflation in the in the country. And one of the biggest things is that obviously when they're tackling inflation, they're going to increase interest rates to help stop consumer spending and lower that inflation. Now, if you look at the statistics that make up the inflation, one of the biggest portions of it, especially right now, is mortgage interest payments. So if you actually take that out, we are getting towards that 3%, which is the high point of their target. So as it slowly continues to go down, when taking out mortgage interest payments, once they get that to maybe around the 2% range that they're looking for without the mortgage interest payments, that's where, in order to tackle the inflation from the mortgage interest, they're going to have to start to lower rates. So as inflation is slowly looking down, we've seen a decrease in the U.S. market as well, which is great to see on our end because we kind of like the, I don't want to say the little sister to the U.S., but we do. Our market does kind of correlate with what they are, especially because we don't want to affect the dollar as much. And that's a big thing right now. Is so I do believe, I like to be cautiously optimistic that by May of next year, we will start to see interest rates slowly start to drop. I don't think it'll be a huge drop, but it will help the market to slowly revitalize because I know it's been a tough market and a tough time for a lot of people. And that's kind of why First National is here to provide the type of services that we have. So if you want to go to the next slide there.
Yeah.
So First National, I always like to say, I know Daniela spoke on this, but the big thing is like what's important about using a mortgage broker is that they have access to multiple different lenders and great lenders like ourselves. So we don't have direct client services where you can go out as an individual client and get a mortgage with First National. You have to be using a mortgage broker, which is great because they give you access to great companies like ours. And we have our alternative lending space called Excalibur, which was launched back in 2018 as we saw the need for it in our marketplace. And actually, the alternative lending space has increased from back then it was about 10%. It's gone up to about 15 to 20% of the market now. And what is alternative lending? Bruce credit. So have you had a bad life event? Were you laid off for whatever reason? Were you sick? Were there family members that maybe there's issues there that you had to take time off? Especially in this environment right now, we've seen unsecured debt increase substantially. And a lot of people are having issues with making payments, and that can cause bruised credit. Now, you have solutions like First National, Excalibur, our alternative lending space to help get you products and solutions to put you in a better position and help you get out of those tough times. Extended ratios is another thing that's big on the alternative lending space. I'm talking about GDS and TDS, which is gross debt servicing and total debt servicing. Now, what that is the percentage of your monthly income that goes towards your mortgage for the gross debt servicing and towards your total debt. So all of your debts, your mortgage, car payments, everything like that. So your total debt servicing. That's why mortgage brokers and everyone will always say, will a car loan affect your ability to get qualified? Yes, it will. So when you're going through these steps, a big thing is talking to your mortgage broker about what debts you have. Are you planning on buying a car? These are the things that your mortgage broker needs to know, because when they're going and doing your application with your lenders, they need to know where they're going to be able to place it. So with the regular banks, a big thing with alternative lending is that it's mainly for those people that don't qualify at their traditional banks. So you go into, an RBC, a TD, a Scotia, you look for a mortgage, they say that for whatever reason, you're not able to get qualified. Well, that's where, again, a mortgage broker comes in so handy, because they can look at your whole situation and say, okay, this is exactly where I can place you, and this is a great lender for X, Y, and Z, especially like a company like First National, which, again, sounded like a salesperson, but we do have an amazing customer service. We have one of the best customer portals in the market that gives you access to your mortgage, prepayment privileges, your penalty payouts. All the information that you need can be found on the mortgage portal that you get when you sign up with us. And And then in terms of just, overall customer service, whenever you're calling in, you really do on the alternative space feel like you're an A-side client when you come to a product like our alternative lending division. So it's all the same thing. And we are a really great company to deal with from, the statistics that have come out on us. Now, another big thing in alternative lending space is stated income, which is business for self. So if you own a business, a lot of the times people don't put enough down on their NOAs and T1s to qualify at the regular banks. Now, a stated income program allows you to get qualified on your bank statements. So what we will do is look at your bank statements and calculate the gross revenue from the bank statements minus the expenses, which we work with the broker to help get the net income that we're using to qualify. That being said, we don't use NOAs and T1s, so it's another way and another solution for you to get qualified when you're not maybe claiming as much as you need to qualify for the mortgage that you want. So it's just another solution to help get you in the right home, get you the dream home that you want, and get you into the mortgage that. And that's a big part of the alternative lending space. It makes up about 70% of the alternative lending space. So alternative lenders are really great for people that own their own business. Another big thing, again, with alternative lending is that we can pay out, judgments, collections. CRA arrears is a big thing. A lot of people say, oh, you have CRA arrears, you can't qualify for a mortgage, or you can't use a mortgage to pay it down. That is something that we do. So again, when you find yourself in a tough situation, my best advice is to call a mortgage broker or have your realtor refer you over to a mortgage broker to help you get into a better situation. Because again, they can go through all these details and they know which lenders are able to do these types of things. Even when you have a bankruptcy, again, these bankruptcies can be, people are going through a tough time. We have solutions for you that once you've been out of that bankruptcy, a lot of the times it takes a while to reestablish your credit, but these are solutions that we have solutions for that as well. So don't be in fear when, in these types of times, it is tough. And again, a lot of people are in fear, but you want to be going to the experts. And again, that's why we pride ourselves on our relationships with our mortgage brokers, because they do they bring us great business, and they allow to give you the right advice to take the next steps in either achieving home ownership or again, getting yourself out of tough situations or, credit rehabilitation. These are all things that why it's so important of using a mortgage broker and having access to companies like First National.
Thanks for the extra promotion, Anthony. Again, I love using you guys because it's just, there's one place that you guys could do it all. You could do that first-time buyer with lower rates in the banks half the times, more favorable penalties and these extra products with like faster turnaround times. And at the same time, I could go to the same place, the same bank or mortgage financing company and find a solution for someone who's had a lifetime event. Thank you both. You guys make my job so much easier with your amazing products and service, and it makes me look good too when I get approval within 4 or 6 business hours. Thank you so much.
Absolutely. Yeah. And something else I wanted to touch on, Anthony, I know we had some slides about bridge financing. I actually had taken them out just because of timing, but I think we have some time if you want to touch on it a little bit.
Yeah, I mean, I can just touch on, so bridge financing, what is bridge financing? Simply when you're selling a property and you're buying another one, and that property that you're selling, you're getting the down payment to purchase the new home that you're buying. Now, if that property is not selling before you purchase the new property, obviously you're not going to have the funds for closing. Now, what a bridge does is it bridges the gap between when you buy that new property and when that other property sells. So basically, the bridge provides you with that down payment, and then once the other property sells, that the whole finance will be taken away. Now, a big thing with First National is that we offer bridge financing in-house. So on our A side and B side, which in alternative lending space, it's very uncommon. We're one of the only alternative lenders that offers bridge financing in-house. And I mean, what that means for a client is that when you're going to another alternative lender, the broker themselves has to go and find bridge financing for you outside of that company. Now that can be a little bit more expensive than what we cost. And I mean, in terms of our cost, it's very cheap. I'll let you, if you have any more questions on bridge financing and pricing, I'll let you reach out to Carmelo. But again, we are one of the most inexpensive bridge financing. And it really allows you to, again, if you're not stressing out to sell your home before you buy the new one, because you have a solution in place to get that down payment from the other property.
Yeah, no, that's a good explanation, Anthony. And bridge financing is so important because to buy and sell on the same day, it's so much stress. I always say just have the closing of the home that you buy 3 days out. It adds 3 years to your life.
Yeah, I mean, ideally, you would want to sell your property before you move into the new home. But again, some people don't have that luxury. And also, it's tough when you're selling a property and then you have to obviously move out and you don't have that new property, right? So that bridge financing is a great solution for clients in those types of situations. And again, it's just another added feature of why you want to be going to a mortgage broker, because they can give you access to those types of products and industry knowledge.
Well, that's a very impressive presentation. Thank you so much, Anthony and Daniela. Seems like there are just so many solutions that are available with First National. I'm truly impressed. That was really good. Thanks, Carmelo, for arranging this.
You're welcome. Again, they're one of my favorite financing companies I like to work with, and they're both great people too, which makes it even easier.
Amazing. So I guess like we can open it up to the floor to see if there's maybe any questions for Anthony or Daniela from our participants here. You can raise your hand or you can just comment in the chat.
Alex, again, are you familiar with that echelon program Daniela described? I'll share it with you again. If you're buying a home, and like Alex, let's say someone's buying like an older home, they got this program where for the first year they pay the cost of it. And if usually when you buy a home, you get a home inspection, but then things could happen with the plumbing or electrical.
Right.
This program will cover, like, let's say the furnace breaks down. Winter comes, furnace breaks down. Well, you don't have any extra money. This echelon service will pay for a whole new furnace to be replaced at no cost to the buyer, which is a fantastic product because with all these older homes nowadays, when you buy a home, I always find once you buy something, it breaks the moment you get in, not before.
Well, it's just like when you have like a new person moving into a space, like it happens every time. They just discover something that's, the seller or the previous person who lived there, they just either they stopped paying attention to it, they forgot about it, they omitted it. So like that sounds great as well. That's definitely something useful because I encounter that a lot. Like washing machine breaks, something breaks, dishwasher breaks. Yeah, awesome.
Yeah, and it's an added feature, right? Like we pay for it for the first year, which is actually a $240 savings to the client.
Very
and then
nice.
after the first year, if they want to keep it, it's only $20 added to your monthly payment. So it's very inexpensive for home insurance. And it's funny because Daniela was touching on this earlier today when we were talking with another broker. But when we first started, it's like, okay, this is a great feature, but who's using this? Like a lot of people have their own home insurance.
Yeah.
It's funny how many brokers every year will come to me and ask me for the number for Echelon for their clients and the stories that we get. Because it's funny, actually, Echelon pays out more than $1 million. So about every claim is $10K. It's covered up to $10K. They pay out millions of dollars of claims for us every single year.
Every year.
Wow.
Yeah. Sorry, I pulled up another slide because I hit set through it. I went to the thank you, and I'm like, there is another slide. So sorry about that, Anthony. Because I'm like, this is confusing me. Because I'm like, there should be another slide. But I think you touched on everything, right? Can you see this? Yeah.
Hold on one second. Yeah, I can pull it up here. So
everything, right?
I mean, in terms of just like First National Excalibur and how the B lending is great. I did touch on the bridge financing there. Bruce credit and extended ratios. We do treat all the clients the same. The one thing I didn't touch on, which is a great feature of ours, is the graduation. So a client at the end of the term with our alternative lending division, if they qualify for the A space with the uninsured rates, Carmelo, or your mortgage broker is able to submit that deal and graduate you over with absolutely no fees. So it's no fees to the client to graduate from our B side to our A side, which is an amazing feature. Not every B lender will offer something like this, where you actually pay absolutely nothing as the client and get switched over. So just another added feature. We see that a lot for bruised credit clients, right? They come in, they've had a life event, maybe they've had some issues, making up their payments. They get everything consolidated into their mortgage. So they consolidate their credit, put it all into one, make the monthly payments a little bit more affordable, get some more cash flow. And then after a year or two, once they've rehabilitated their credit and reestablished and now have a higher credit score, they're able to switch over to the A side. So we actually see in the last little bit, about 50 to 60% of our bruised credit clients graduate over, which is great to see.
This is probably one of my favorite products. Like, I mean, obviously we do the day-to-day, the new to Canada, we do rentals, we do, just in terms of niche things that we're able to do, medical professionals, things like that. But one of my favorites is the fact that we'll have the opportunity to take those clients who have had a ding in their credit over the last little bit. I mean, COVID was great for a lot of people in terms of savings, but in another way, there was a lot of people that were affected in terms of their incomes and maybe did miss a payment. There was a lot of chaos in the world during that time period. So they're not able to go to an A lender because of that bruised nick on their credit bureau. So they're able to come, they're able to rehabilitate, you're able to work with your broker to actually kind of bring you back to that A space. They'll coach you, and it's worthwhile for the broker as well, because they're able to look like the rock star with an exit strategy that actually works, right? So sometimes, unfortunately, when we do move to the alt space, you put them into them and there's no way of getting them back into that prime space, and this is the solution for that, for sure.